think some of the things that Carl picked up on there sort of already touch on that. I mean, there's a number of factors that would affect premiums increasing, and ultimately that all flows through to advisors and the clients ultimately having to pay more. Obviously insurers are under pressure. That means that less insurers in the market means that there's more pressure on the insurers left in the market. That means the premiums end up being increased for a number of reasons like that. And what do? When we have to try and make sure that we combat premiums that are increasing in the best way possible. So we've tried to bolster the panel. We'll talk a little bit about that today. We've tried to find new ways to innovate around our technology, where we can hopefully find ways to bring prices down because we're reducing costs internally as well.
Yeah, I think just to add to that, if you think about the state of the mortgage market as it is right now, and then you have this other thing going on, which is happening in the insurance space, where you're seeing almost an insurance crunch. So you're seeing a reduction in capacity at the same time as general inflation is hitting in. At the same time, the claims inflation is coming in, and premiums are rising quite quickly. And that is having a significant impact on the broker's ability to sell that product. It's also making it a lot more difficult for consumers to find the right product and get at the right price. We've given brokers the opportunity to, with commission changes, so that they can look to kind of bring their commission rates down. And I think it's quite important to know that as the commission we pay commission percentages, and as premiums rise, so does the size of the broker commission in pounds amounts. So there's opportunity there, I think, to try and help the consumer by looking at the overall commission take. But it's definitely a challenge to sell those products now in a market that we're in with increasing rates. But as Gav said, we are looking at bringing on new insurers to the panel. So we've launched one recently, and we've got another one in pipeline to do that soon. And that's what we're trying to do. We're trying to improve the panel, give the brokers choice, and hopefully that's good enough for their consumers.
This is happening at the same time as we're seeing big regulatory change through the Consumer Duty as well, and you've got the fair value requirements coming in. So insurers are being forced to raise their prices, but they have to do it through a prism of still offering fair value to customers, which is possibly the first time they've had to take that into account. So it's an interesting time.
I think there's a number of ways and a number of processes that we'd encourage advisors to implement, and as well as advisors themselves in larger organisations, because I think it's building from the ground up, building a process that's that you can repeat every year, rather than just a transactional original sort of sale and then sort of hands wash. And again, it goes back to Consumer Duty and the whole spirit of what the regulator is trying to sort of embody in terms of speak to your clients regularly. So in terms of what do you do in the basics, introduce general insurance conversations early on when you have a mortgage, when you're having a mortgage discussion, and make sure it's part of every mortgage discussion, whether or not it's a purchase, remo, product transfer, all of those sorts of things. Again, if you're engaging annually with a client because of general insurance, that doesn't just mean that you need to talk about general insurance at the time. An annual review is part of many other facets of financial services anyway. Why wouldn't you try and create the opportunity to speak to your clients more regularly in the mortgage side, which is, as I said, traditionally more transactional? I think really it's about bringing that culture within firms to ensure that it's a real fundamental sort of cornerstone of the overall holistic sort of advice, and that really that's quite a big change, I think, for the majority of brokers in the UK. But we're working towards helping people do it easily. I think for some time now, you guys will probably agree with me, you're getting the same messages from advisors and firms of different sizes, down to your one-man bands, up to your larger businesses. They're as Carl alluded to earlier, you're dealing with a market that is very heavy on the sort of remortgages and product transfers, and what that does is reduce the opportunity for new business. The other thing that advisors have to contend with when the market is like this is they're going back to clients a lot more often to talk about rate changes and things like that, and you're not getting paid every time you do that, unless you're charging a fee every time you have a conversation, which is not traditional in the mortgage market. So those sorts of things mean unfortunately you're still very, very busy, but you're not earning as much as you might have been doing a couple of years ago. So really we try to make sure that it's easy for advisors to have the technology to be able to introduce those general insurance conversations. And really it's down to us and our competitors, the people that we work with, to ensure that advisors know that there are the options out there to be able to start doing that. If you're trying to create a new income stream, then why not look at an income stream that you're not, utilising at the moment or capitalising on at the moment, and input really easy technology to use and good products, a good panel, and you should be able to get on the right track.
Yeah, I would just add to that, we've got right now we've got a really strong buy-to-let panel, so I would absolutely be encouraging brokers to take a look at that. The other thing to bear in mind is, I said at the start of this, is that we're seeing an insurance crunch out there, and it's difficult. And you're seeing claims inflation, you're seeing premium inflation, and rates going up. The insurers have been hurt by the weather, really, by performance on their home books. Landlord insurance generally performs a little bit better. It generally books the trends a little bit, so it still suffers when the home insurance suffers, but it books a trend a little bit. So you're not seeing quite the rate going through on buy-to-let insurance. So again, coupled with a good strong panel, easy quote and buy system, I think there's opportunity there to run.
Well, yeah, I mean, you touched on in the question there in terms of it being the first product that we've manufactured ourselves, which is obviously a really proud moment for us at Source. And really one of the key things we're trying to do more of here at Source is listen to the people that we're providing services to. So we launched the Advisor Insight Forum earlier this year. That is part of what's going to build what we want to do in the future. But in regards to the product itself, LV are backing that product, and ultimately they've implemented something called IHP, which allows us to price it a little bit more competitively. So that's going to be the first initial sort of impact for advisors, and clearly in the market that we've been discussing today, that's quite a crucial element.
Yeah, so just to add to that, we've gone live with that product now. It's available, it's out there, it can be sold. LV, as Gav said, are the first insurer on our panel to underwrite that. We've also added in Prestige as a new insurer. That is part of quite a deliberate objective to try and help our customers and our brokers to expand the footprint, so we can write more risks and to help them. And obviously we're looking to do more of that going forward over the next sort of 3 to 6 months, and just add to the panel. So as it stands at the minute, that policy wording sits alongside some of the other insurers that we have on the panel, and eventually through next year we'll transition across to a fully common policy worded panel.